Hello, everybody. We're here with John Azar. John is the founder of Peak15 Capital. Welcome to the show.
Thank you.
John, you were part of a very interesting panel just about an hour ago here at IMN conference. Could you tell us some takeaways from the conversation that took place?
The conversation actually was great because it solidifies a lot of the assumptions that we have about what's going on in the market right now and how our other people in our cohorts are operating and looking at the deals, from what spectrum they're looking at deals, how they're looking at management, what kind of different approaches they're taking right now this year and hopefully into next year, into how they're approaching the acquisition and partnerships and what sponsors, what we typically like to look for from a sponsor perspective in order for us to partner with them and be able to bring our capital to the table.
John, what are the main challenges that you see in 2024 for multifamily investors and operators? And also, what are some opportunities that you see for those categories?
Sure, yeah. I mean, the biggest challenge I think we're going to see in 2024 is that there's still a disconnect on the expectation of pricing and what's happening in the real world in terms of in terms of the connection between pricing expectation and pricing execution. I think that's probably going to be the biggest challenge in 24 is that bridge needs to be gapped, and it's going to take, unfortunately, some pain in the market in order to have the players involved realize that they need to adjust their numbers accordingly to meet the expectation right now of either people that are funding the deals, bringing capital to the deals, even true institutional. We're not really a true institutional shop. We're a private equity shop that puts out capital into deals and partner with sponsors and operators, but we still have our own underwriting approach that's very conservative, and we look at numbers very, very pragmatically. The numbers have to make sense for us, not just what's going on now, but what's going to happen in 2 years and 3 years or 5 years from now. So therefore, the way that we look at the lens that we look at deals might be a little bit very conservative compared to some other people on how they look at deals, specifically if they're looking at deals from the spectrum of how they were looking at deals back in December or November of last year, because we're no longer in November or December of 23. I know it sounds ridiculous that this has only been 5 or 6 months ago, but 5 or 6 months ago is a different world. It's a different market than where we are today.
It's also area specific, right? Certain pockets are performing different than others. Would you disagree with that?
Very much so. Very much so. Certain buckets are performing much better than others. And that's why we've expanded our coverage. We used to be very focused on multifamily value add. And now we've expanded into Core Plus. We've expanded into BTR and SFR, single family rentals and built to rent communities. We've expanded into looking at new construction. So, we're basically alpha driven. So wherever there's alpha, that's where we're going to be essentially driving our attention to. So, bottom line, if that's what drives you is alpha, then you have to be able to be a druid at changing your stance and changing your underwriting criteria and even changing maybe the possible type of assets that you're looking at.
John, thank you so much for taking the time to be with us today.
You're very welcome. Thanks for having me.